It's Sunday, the 21st of January 2025, and I'd like to go through the week that has just been. It's been a fragmented week for me, and I'll explain that momentarily why that is. So these are the 7 topics that I'd like to go through today. I'd like to give an update on the £10,000 live trading challenge. I'd like to briefly talk about my week of boredom and trading. Then I want to go through the FTSE first bar positive and the first bar negative. Then I want to do the same for school run and brunch break. And then I'll give some thoughts about mechanical trading entries. And then I want to do the same for the Dow and the NASDAQ. And then I want to give a little warning about stock indices. The whole thing should take about 30 minutes, I hope. And of course, it is recorded. So let's start with the £10,000 live trading challenge. I haven't traded that much, but it's more or less unchanged. It's slightly higher than when I started or when I left last Friday. It's £13,309. And that's where I'll start tomorrow morning. My week of boredom. Monday I wasn't doing much because it was Martin Luther King Day and Inauguration Day in America. The markets were surprisingly open. I wasn't actually aware of that, but I didn't trade the US and I left the European markets alone. I had to take a couple of days off of trading because my book Best Loser Wins had been released in Portuguese, which I think now is the 11th language it's been translated to. Don't ask me what languages it's been translated to. German, Polish, Malaysian, Simple Chinese, Vietnam. It's funny. It hasn't been translated to my own language. So if there's anybody out there in the world of the kingdom with the Denmark who would like to take on the publisher's role, maybe there's a little gig for you there. So that's why I haven't been so active this week. But let's get to it. FTSE first bar positive and first bar negative. So FTSE first bar positive. This is the opening bar in the FTSE on Monday the 20th. If the market had traded below that low, I would have sold short. But as you can see, it didn't. So any other trades that I may have done during the trading day in the FTSE would have been the result of a more discretionary approach as opposed to a mechanical approach. So I just briefly want to go through the entire week. So here's Tuesday. So this was a first bar negative, and that gave a buy signal over here. It is very, very difficult to ascertain whether that would have paid off or not. You would have gotten in around 5,820. You would have had a stop loss at 5,800, so the stop would have never been hit. But would you have sat through the position for so long, or would you have moved the stop loss to break even? I can't speculate on that. But there you have it. It's not that the strategy lost money, but boy, was it a long wait for anything to happen. The following day was a first bar positive. And as a result of it, I would have to be a seller short down here. And as you can see, nothing happened until very late in the day. If you had decided to take a first bar positive sell short later in the day, you would have sold short below 8,548. And the best you would have gotten out of it was 8,527. I think more interestingly is the question you would have to ask is, if you'd sold short here, where would your stop loss have been? And I would argue that your stop loss would have been somewhere up here. Definitely not up here. You don't need to have a stop loss all the way up there. But somewhere above this range here, maybe here. All right, let's go through to Thursday. another first bar positive, so an incredibly positive week for the FTSE, and first bar positive sell, never triggered. And then finally, first bar positive, sell short here. And of course, as a good trader, you got out here. Although, seriously, I couldn't tell you. I wasn't trading in the Telegram channel in YouTube, so what I did, I don't really want to tell you, because then it just feels like I'm showing off. I would rather just say that I sold short here, put a stop loss here, and then I left it alone and got on with the tedious job of editing. And I'll tell you what, writing a book is a lot of fun. Editing a book is about the most soul-destroying thing I have ever come across in my life. Now, what I would like to do next is to go through the school run in the DAX. So the school run is a 15-minute breakout strategy. And on the day of the inauguration, where the US markets were closed because of Martin Luther King Day, I decided I am not taking this, because the market made a big move up, big move down, and then for the next 4 or 5 hours, the market did absolutely nothing but to trade within. And then, comically, it just broke the range to the downside, and then it rallied, I think it was 200 points. However, you could have said that was actually a pretty good buy here, but boy, I am rather lucky that I was not as active as I normally am during this week, because as you're about to witness, this week was not a good week for school run. As it makes me think of a story that I read about Richard Dennis, he was the sort of the founder or the originator of the strategy and the group of traders called the turtle traders, and they were trend followers. And they were essentially buying a breakout of a 20-day high, and they would sell short a breakout of a 20-day low. And I think they also had a 55-day high and a 55-day low. It's a very simple strategy, and it works absolutely beautiful if the market is trending. But if market isn't trending, then following a trend following strategy can be a rather messy and expensive affair. And school run is essentially a breakout strategy. It means that you would be a buyer above 983. And as you can see, you had one candle of bliss, and then the market went all the way back down again. And it basically was just toying on the upside of the range and the downside of the range. And if you follow this as it should be traded, you are in for a world of hurt. It didn't get much better during the week. If we go to the 22nd. So this one I did actually announce in Telegram, and I took it, but I was incredibly mindful of the humongous size. So what I did was I actually waited. The high here was 258, but I actually got a fill around, I think it was 250 or 253. And I had a stop loss somewhat down the candle, but not all the way down. I didn't want to have a stop loss that was about 70 or 80 points. But fortunately, the market gradually began to grind my way. I think I forgot to mention here the brunch break, which is the 7th 15-minute bar, whilst the school run is the second 15-minute bar. This probably would have worked a little bit. You wouldn't have been stopped out, but boy, you had to have patience. Here, the brunch break actually does a rather good job of signaling a breakout, and that would have been a useful add to it. I didn't add to this position. I just basically left it alone this week. Then we go to the 23rd, which was Thursday. Market broke out nicely. I took a short. The interesting thing about this short here at 274 is that I anticipated, and I rarely do this, but I actually anticipated that the market would break below, and I showed it here before it even got to the trigger signal. The market went as low as 252, and when I was 20 odd points in profit, I moved my stop loss down. And I got stopped out for nothing. And here's Brunch break. Brunch break actually worked really well. And I suppose school run also worked well if you don't mind sitting through 4 or 5 hours of absolute misery. And then finally, Friday, really bad day for the school run. First trigger you short, stopped out, trigger you long, and maybe you would have redeemed yourself a little bit, and then short again. But again, the Brunch break came to the rescue by selling short here on a pretty narrow stop loss. So the Brunch break has saved the week, and that's important to remember as we go into the next trading week. And as I said earlier, it sort of reminded me a little bit about what Richard Dennis was going through. He took a break from trading, came back, and I don't know whether this is true or not. You can never really tell with the internet. You do always have to question the sources, but the story is that he lost half his fund and then he closed down to go into politics. There you go. I don't think there's any chance of me going into politics, and I rather hope that I won't lose half my loot. So the thoughts of the DAX as we go into the next trading week is, boy, it would have paid off really well to do the opposite. Meaning that if we come down here, it will actually paid off to be a buyer rather than selling short. And if you look at the previous day, it actually would have paid off to be a buyer down here, of course with a stop loss, and I'd be a seller above here, of course again with a stop loss. So most certainly something that I need to be mindful of as we go into the next trading week, but also how amazingly well the Brunch break did actually work. And in case you didn't catch what Brunch break was really all about, it is the school run is the second 15-minute candle, but the Brunch break technique that I use is the 1, 2, 3, 4, 5, 6, 7. Would have triggered you long here, you would have been stopped out. But if you had had the courage and the conviction, boy, you're in for a treat. Okay. Those are the thoughts that I have about the DAX. Now I want to take you through the Dow and the NASDAQ on the school run Brunch break, but we'll start off with the NASDAQ. So here's the NASDAQ. And so what I've done here is I've just I placed the cursor over the second 15-minute bar, and it triggered a short here. So NASDAQ worked really well, which was surprising because the Dow, as you'll see momentarily, worked very poorly. 1, 2, 3, 4, 5, 6, 7. I don't really think that Brunch break produced anything worth noticing, but normal school run did. So that was Monday, where the market was sort of quasi-open, wasn't really open. So let's go to Tuesday. The Tuesday produced a sell here and a buy here. The buy was beautiful. The sell was, well, you need to have a really strong money management policy. And don't forget, this was also a 100-point move. I'm not sure that I would want to trade with a 100-point stop loss. 1, 2, 3, 4, 5, 6, 7. Long above, short below on Brunch break. Let's go to Wednesday. So this is the 22nd. That's this bar here, long above. Again, notice the length of the candles. That is something you need to be exceptionally mindful of if you're trading at breakout. And you could easily argue, whoa, then a much better trade to have sold short here. If we look at Brunch break, it will be 1, 2, 3, 4, 5, 6, 7. Long above. Now that was a good trade. So maybe as I attempt to grow this account from 10,000 and higher, maybe the brunch break needs to have more and more emphasis, because of late, school run just hasn't performed as well. Let's go to the Thursday, and it's long above and short below. And as you can see here, you would have been triggered in on the short side, and you would have lost, almost certainly you would have lost. And the long side would have produced something. If we count up to brunch break, 1, 2, 3, 4, 5, 6, 7. Again, a rather iffy trade, if you ask me. So not a particularly promising week for breakouts. And then finally, Friday, having just said what I said, a sell short in the NASDAQ here. Interesting how it comes up and touches that. Count. So school run worked really well. 1, 2, 3, 4, 5, 6, 7. Long above, short below. Okay. Now let's go to the Dow and brace yourself, because it's not going to be pretty. Short below, great. That was a good trade. Let's do brunch break. 1, 2, 3, 4, 5, 6, 7. Not good. Let's go to the Tuesday, and this was the day where the market was sort of semi-open. Okay, again, school run disappoints, short below and long above. So some of you might be sitting here thinking, maybe we should just focus on the long side during really extremely bullish markets. I thought about that too. 1, 2, 3, 4, 5, 6, 7. Brunch break worked well. Let's go to the Wednesday. School run is long above. I think it would be possible to at least move the stop loss up or move it closer. And the short side would not have been good. Let's count up to the brunch break. 1, 2, 3, 4, 5, 6, 7. Long above, short below. Short is not triggered, long is triggered. So again, brunch break delivers well. School run, horrible. You took it short, not a chance you would have made on that. Long side works again. 1, 2, 3, 4, 5, 6, 7. Long above. So brunch break delivers again. And finally, the final day of the week. Notice that. Now, in fairness, I didn't trade it, and I don't know how much it went below, but just assume that we got stopped out, because you probably will up there. So really poor performance of school run. Let's look at brunch break. 1, 2, 3, 4, 5, 6, 7. Not exactly promising, although it is on the short side. So overall, neither DAX school run or Dow and NASDAQ school run performed overly well, but brunch break certainly outperformed school run during the week. And first bar positive, first bar negative worked really well, and they often do. And then finally, maybe a little warning about stock indices is certainly worth mentioning. A long time ago, I traded a strategy on a 5-minute bar. And the strategy essentially said you follow the S&P, the Dow, and the NASDAQ. And if one index makes a new high, but it is matched by secondary highs in the two others, then that's a confirmation of a sell short. So if we get a close, as we have here in the S&P, above a major high, but it's not confirmed by two other indices, then that's going to fail. And what this points to is that the market will be headed down again. That's if it had been on a 5-minute chart or a 10-minute chart. I even traded it on a 30-minute chart. I've never seen it on a weekly chart, but I thought that I would bring something to your attention. That is, I just read Larry Pesavento's newsletter. Granted, Larry has been somewhat bearish during this bull run, but he made a really compelling argument for a high. And he's saying if we take out Friday's highs, then I'm wrong. But if, to me, the chart suggests that we are headed down, and the cycle that he's following is a, dare I say, a rather cataclysmic cycle. I thought that I would point it out to you because I felt that this weekly pattern here with a new high in the S&P that is not confirmed by the Dow and the NASDAQ was worth pointing out. But hey, I don't want it to be too serious either. We just so I thought I'll end this weekend review on a light note, and you tell me, who do I look most like, Sideshow Bob or Krusty the Clown? And so with that cheerful attempt of trying to be funny, I'm going to end this review, and I hope to see you tomorrow morning for trading in Europe. And I'm glad to say that I got rid of all the editing. It was deeply unpleasant. It makes me think if I'll ever publish my second book, because I really am not a fan of sitting and editing. I think the worst part about editing is that you sit there and go, did I really write that? Oh, I don't like that. Oh, I think I'll just change it. And in the process, you seem to be writing the book all over again, which is exactly what I didn't want to do. Anyway, that's all for me. Thank you for being here, or maybe you're watching this later. Take care. Stay strong, stay safe, and have a wonderful Sunday and the rest of your weekend. Bye-bye.